Welcome to Marriott MBA Today. My name's Dan Patton. I'm joined here with Dr. Craig Merrill, who's the director of the MBA program here at the Marriott School. Thank you very much for coming, Dr. Merrill.
Good to be here, Dan. Thanks.
Well, thank you. Well, as you know, we're continuing our series on personal finance, and especially how it relates to MBA students, both in the program and as they're getting out and starting their careers and so forth. And I wanted to talk to you a little bit about insurance. I think there's a lot of people don't know too much about insurance, specifically life insurance. Can you just start us off? I want to know a little bit about what's the hype over life insurance. Why are people buying it? What do we need?
Sure. So life insurance, I think, is one of the more misunderstood financial products that's out there. You hear a lot of sales pitches about it. You hear a lot of words thrown around, ideas, different kinds of contracts, term and whole life and universal and variable, and people struggle to know what is it and where does it really fit. I think the easiest way to understand it is from what you've learned in your finance classes. It's a contingent funding agreement. It's a way to have revenue at a time that an income stream is interrupted, like when someone dies. It's a way to then provide for the needs of the family in the event that income were to be interrupted.
Okay, so how does that work then? I mean, I'm getting out of school, I invest in a policy, what happens?
So let's just say you use a simple term policy so that in the first year of employment, you're worried about, okay, what if something happens during the year, a meteor hits, or, because you're healthy, you're not thinking that you're going to die in the next year, but you worry about your family. So you want to have something in place so that if something were to happen to you, this career path that you've invested in and the income that your family's counting on gets in some sense replaced by insurance. And term insurance is just a simple matter of what's the probability of you dying times the amount of money it would pay if you died. And so it's really cheap for that first year when you're young and early in your career.
Okay, great. So that's a little about term insurance. Now you talked about term, you talked about whole, universal. Can you walk us through a little bit of what are the differences and what should we be thinking about in terms of which one do I buy?
Sure. So there are a variety of insurance products that last longer than just a year.
Right.
And as you get older, sadly, I'm facing this, the probability of dying goes up. So, year by year, that probability goes up, which means term insurance would be getting a little more expensive every year. And let's say you buy a 20-year term product. Well, what happens is over those 20 years, your cost of insurance gets a little higher and a little higher each year. But what you do is you pay a little more in the early years, and that goes into an account that accumulates for you. So that in the later years, when you pay that same premium in the later years, the cost of insurance is made up by the money that's in an account. Now, that's 20-year term. Whole life just does that for a whole lifetime.
Okay.
So you've got shorter term, medium term, long term. The longer the term, the more expensive at the beginning, but the better coverage you have later in life.
Okay, so how much coverage do you suggest that a person like me who's just coming out of school in late 20s, how much coverage do I really need?
Well, I don't want to be too glib about this, but I always told my wife when we were young, I figured 6-8 weeks worth of coverage and she'd be over me, and that's all we got to cover. But the reality is it's between a spouse and yourself, you've got to decide what are our goals. If you want your spouse to never have to work again, you need more insurance. If you never want to have to work again, you need more insurance on your spouse. But it's a decision you make together about how much you need in the event one of you were to be lost. And that depends on what amount of income you want to replace with the insurance. But certainly your need for insurance should go down over time because you're saving and developing assets that you should be able to rely on later in life. So maybe a little more early on and less as you go through life.
Okay, but speaking of saving then, now I understand that whole life can be used as an investment vehicle to save up for the future in addition to the insurance component that you can get a return on investment, and some of those funds are invested by the insurance company that you can use later in life. Would you recommend using whole life insurance as an investment vehicle?
Well, the difficulty with this is, what if you don't need the insurance? And you're paying the cost of insurance year by year. It's hard to imagine that that's your best investment vehicle. And you'll hear sales representations that say, well, it's tax deferred.
Yeah.
Wonderful, but you're still paying for insurance. So in my mind, especially as you're coming out of school, the most important question is, how much insurance do I need and how do I get it cost effectively? You certainly don't need all of your early life insurance to come from a whole life policy. You only need the amount that you want in force throughout your life. And some of that early insurance is going to be provided with term insurance. That whole life insurance shouldn't be thought of as an investment vehicle, but as a way to get cost-effective long-term insurance.
Okay. Great. Well, thank you very much. We really appreciate your advice on this matter. I think we've all learned a little bit more about life insurance, some of the different policies and so forth involved, and hopefully that we can spend a little more time later on talking a little bit more in detail about some of these options. Thank you very much for joining us today. Join us again next time for another great and exciting episode of Marriott MBA Today.